Good morning, everybody. It's the 4th of April, and as I talk to you, the Nasdaq is down almost 6%. The S&P 500 is down almost 5% in the night. Australian market is slightly insulated from this Trump tariff event. I'm calling it the TT, being a bit of a motorcyclist. And the VIX volatility index is almost up to 30. It's about the third biggest spike we've had in a while. And overnight is being described as the worst night since the pandemic. And the previous three noticeable spikes, this being one of them in the VIX index, has been the pandemic and the global financial crisis. So this is reasonably significant. As I say, Australian futures are only down about 100. Our market was down almost 200 points at one point yesterday, about 170, closed down around 100. It rallied because the bank sector is holding up quite well. The Marcus Today strategy portfolios, I hope you know, it's a fabulous day for us. This is the Nasdaq here. The Marcus Day strategy portfolio has been in 100% cash now for a couple of weeks, and we have managed to avoid this disaster. We have cashed out before perfectly in the pandemic. We cashed out for 120 days in 2023 when the market went down 8%. We bought the bottom of the market in November 2023 perfectly on that Fed meeting. And we've sold the market again just ahead of this as Trump has come in. The talk at the moment is that these tariffs are going to lead to a recession. And as we watch the media this morning, everyone's gone headless. I was speaking to one of my golf friends yesterday who rang his advisor at a nameless financial institution in Australia and told him to liquidate everything, got persuaded not to, and came over and asked me what he should do now. It does annoy me that I remember in the GFC, my mother-in-law rang her financial advisor with the same message. I'm very worried. I think I should be getting out so I can sleep at night. And the advisors at this point who don't know what they're doing will be giving you all the brainwashing mantras that have been running in this industry for decades, all of which are designed to keep you in the market. It's buy and hold, time in the market, not timing the market. It's a weighing machine, not a voting machine. Buy stocks, only buy stocks that you would be happy if they shut the market for 10 years. If you never sell, you'll never take a loss. If anyone ever says that to you, immediately change your advisor. So people are ringing up their advisors now, being asked what to do, and they're all being told to hold on, it'll be all right in the end, which is fine. But really, the idea here is that advisors don't want you to be trading, they don't want to be disturbed, and they still get the same amount of fees if you do nothing. The guy I was talking to yesterday is down $30,000 on Whitehaven Coal, one stock, and the advisor put him into it, and the research department said the research department say it's going to be great long term. For goodness sake, you need to pick up on the vibe. I'm getting lots of emails from people asking me, should I sell? What do I do now? I'm holding this. Through the Marcus Today newsletter, the vibe is clear. We have been in 100% cash now for a few weeks, and it's up to you to make your own personal decisions. I can't be responsible for your personal decision. Otherwise, you'll be holding it against me in 5 years' time when the market's recovered. So make your own minds up, but the vibe is very clear from us. The big game now is, how do you spot the bottom? Hopefully, all Marcus Today members are in cash and have avoided this disaster. So our only game is to work out, when is the bottom of the market going to come? Don't predict anything. You can't predict anything. I can't predict anything. But what I can tell you is that the bottom is going to have an anatomy which is different from the bottom in the pandemic and the bottom in the GFC. And I think what you'll see is there'll be a narrative which has to change, and that's on tariffs. So the major problem here, and there's always a major problem. So there's COVID. There's in the GFC, it's the mortgage-backed securities market. Here, it's the expectation that tariffs are going to lead to a recession, and that is going to also cause a rise in inflation. But recession is the main driver here, and tariffs and whether they're permanent or not is the main debate. So I think you could see a bottom in the market if this whole thing turns out to be a negotiation and these tariffs aren't permanent and they are all wheeled back. Having said that, Trump's trade advisor in the White House, Navarro, has said this morning that this is not a negotiation, but even that could be just a game being played by Trump. So the core of it is the bottom will come if these tariffs all disappear tomorrow. And so look out for news on that. And the market can't really recover until it gets over its recession fears. So that's the pot that all this is boiling in, and that's what we've got to look for changes. But there will be indicators, and I think the indicators at this point are going to be recession related. There is always the VIX index, which exaggerates. It's a looking back index. It's not a predictor, but it does show exaggerated movements. So when the VIX index, which is still going up, so you're not buying yet, when the VIX index peaks out, starts to come down rapidly, you could start saying, oh, things are changing a little bit on sentiment. But I think what you'll find now is that bond yields are going to come off fairly rapidly as everyone expects the Fed to step in and take a hand and avoid recession. So bond yields are coming off. The other thing that's going to come off is the US dollar as well. So I think the anatomy of the bottom is going to be a change in the tariff structure from what we currently assume, a bottoming in bond yields, a bottoming in the US dollar, and that will coincide with a very sharp rally, a very sharp overnight one-day rally, two-day rally in the equity market. So if you're looking for the bottom, relax. You don't have to catch the bottom, by the way. The markets go up slowly. They come down fast. The idea is they come down 3 times faster than they go up. So you've got more time to buy, and you don't want to be jumping at every rally on Wall Street now. We need to look for a very sharp rally in equities in one night. That will alert us. That has to be accompanied by a rally in bond yields and a rally in the US dollar, a drop in the VIX, and I'm sure there will be other indicators out there as well. But hopefully you're in cash with us at the moment, and there is nothing for us to do. I think the time has come for us to go and get our handicaps down. What I can tell you is when a market does have a sharp drop like this, you will find that it lingers, so it doesn't rebound that easily from this sort of market damage. And I think it would be foolish at this point to be constantly buying every little rally. I think this could be with us for a while. Of course, if you're worried about when the bottom comes, you need do no more than read the Marcus Today newsletter, because there are a few things that work here. One of them is hypervigilance, realizing we can't predict anything. We're reacting to things. And we wake up every morning and make decisions based on fact rather than fantasy, on what's happened rather than what we think might happen. Everybody at the moment is trying to guess what happens. Don't worry about it. You'll see it happen and we'll react to it. And I look forward to that moment. But for now, hit the golf course. There's nothing to do today.